Okay, the next thing we're doing is changes in AD, which is at the bottom of this page. So, we need depreciation expense. It was too small, so we have to make it go up. So let's do that one first. So it's going to have to be miscellaneous expenses. We're going to make it go up by 600. Now we also have to impairment expense. So you could add impairment expense by itself if you wanted. Okay, but usually in Connect you're kind of stuck with what they give you, so I would put it in miscellaneous expenses. So we've got to increase the expenses by 50. That's why we're adding them. We're increasing expenses. Okay, now balances here we have to do something. Well, we've got to record an increase in equipment of 200. So here's equipment, increase 2400. And we have to record goodwill on the balance sheet. Now, notice often they just leave these blank and you have to fill them in, but I've put them here just because this is new. Okay, so goodwill is 4850. Sorry, 2450. Oh my God, don't put the total. 2450. Okay, ending balances go on the balance sheet. Everybody good with that? Checking I didn't miss anything? Yes. So that's our schedule of AD. We've done both the impairment and the increased depreciation expense, and we've recorded the increase in PPE and the balance of goodwill. Okay, changes in AD, that's done. Now we have to go to the realized unrealized schedule on page 6. So notice we've already used the end column for the calculations, so we don't have to worry about that. We do need to record this stuff. So every single one of these accounts has to be recorded. Okay? And you can sum them up if you want. I'm going to put them individually so you can see where each single one comes from, but you can take shortcuts again later. The only time you want to be careful is you can't combine these for the calculations because some is upstream and some is downstream. Okay. So let's start with the upstream unrealized. We've got to make cost of goods sold go up by 300. So we're going to add 300 here. We've got an inventory decrease by 300. Inventory. Sorry, you guys. I added that 300 up here. Now we've got to make inventory decrease by 300. Then going across, we've got to make income tax expense go down by 120. And deferred income tax go up by 120. Now, I did mention that Wiley Plus sometimes puts DIT and it'll have a debit balance, DIT credit balance. So if it's a debit like this one where we're making it go up, it goes here, and if it was making it go down, it would go here. Okay? Okay, so we've done DIT, made it go up. Okay, good. Now we can go to the downstream unrealized, and so I'm doing these two numbers, these four accounts. So cost of goods sold goes up by 175. Inventory goes down by 175. ITE, income tax expense, go down by 70. And DIT goes up by 70. Okay, and that's our realized. Now, the last thing we have to do is put all our calculations in. So let's start on page 6 and look at net income. Hopefully when we're done, we get 4912 for the consolidated net income. And then we have to split it into these two pieces. So we're going to put 4912 attributable to the parent is 4827, and NCI is 85. Okay. Then we need ending consolidated retained earnings, and it's 16,979. So and then, and it could be negative, because you can have it as it. NCI, ending NCI is 1876. And again, sometimes there's a space, just a blank, so you put in NCI. 1876, 1876. Now, let's just remember some of the things. That's all our statements, or all our calculations. We're going to consolidate them now. I just want to remind you some things to remember. What should the balance in the investment be? 0 always, because you cannot have an investment in yourself. Retained earnings, we've replaced it with a calculation, so you're never going to use those. Unless it's the first year, but don't even worry about that. I don't think any of your questions are first year. Common shares, do we care about the subs common shares? No. So those are common ones that you're going to be canceling off. Some people like to cancel them off first. Some people don't do any of that. They just fill in this and add them up. Okay. So again, we're just adding our way across. Let me just count that I didn't miss any. 6, 7, 8, 9, 10, 11, 12, 13, 14. Yep, we're good. Okay, so we take sales, 25,000 plus 9,000 minus 5,000 minus 4,000 gives us 1,000. Dividend income, it's going to be 0, and it's almost always 0 unless you had more than one investment. Other revenues, 20 plus 150 minus 10 is 340. Cost of sales, you just add and subtract all your way around. 8075. Miscellaneous expenses, you should get 8590. Income tax expense 3763. If you add and subtract, you get that right, so you're happy. I suggest putting this on pause, guys, doing it yourself. Make sure you know how to add and subtract across, because it's easy to forget some of these things. So make sure you try it. I'll just keep going here. Inventory is 14,125. Miscellaneous assets 57,300. PPE 13,400. DIT 190. And goodwill 2,450. Current liabilities 27,610. Long-term liabilities 2,100. Common shares, always just the parents. And we've already got the last two filled in. And so both of these should total 87465. So make sure you give that a try. On Wiley Plus Connect, they won't show these two columns. They just want you to fill this in with your calculations. So that's how you do year 4. And our new schedule is the one on page 6. And so on page 6, this new schedule goes. Okay? So take a look at that, make sure you understand that, and then I'll go on to the next example. On the next video. Bye.